I'm a sucker for a good comeback story, and comeback stories don't get much better than what we are seeing right now from the Gap. After just over 6 months of new management, this company is looking stronger than it has in ages. Yet after languishing for years, the Gap brought in Richard Dickson, formerly of Mattel, as its new CEO. He took over in August, and by November, he already delivered a much better than feared quarter. At the same time, I wasn't sure how much of it came down to new management. But tonight, Gap reported again. This time, it's clear we're seeing a genuine turnaround. Company earned 49 cents per share, and also looking for 23 cents. Along with higher than expected revenue and flat same-store sales, Wall Street was looking for them to be down. I love the gross margin story here, too. Even before the quarter, the stock was already up 88% since Dickson took over, and now it's moving higher again after hours trading. So how the heck did this happen? How could he pull it off? We got to know more about this story. Let's take a closer look with Richard Dickson. He's the new CEO of the Gap. Find out more about the quarter and what comes next. Mr. Dickson, congrats on the quarter and welcome to Mad Money.
Thank you, Jim. It's good to be here.
Well, I got to tell Richard, your reputation precedes you. I spoke to you on Cries. Mattel loves you. I knew the guys at Jones. They thought you did a great job. But I want to say, from your first conference call, you seem to be enjoying yourself in a job where I have to tell you, other people felt they were toiling in a factory.
Come on, it's fashion. Fashion is fun. It's entertainment. We mean so much in the world. Our brands are recognized around the world. It's a storied company. It's an incredible opportunity, and I am having a lot of fun.
Now, you're starting out correctly, I think, with your priorities, maintaining and delivering financial and operational rigor, because that's what I was most worried about. I was afraid to recommend the stock because I said, who knows, maybe the cash disappears. You went the other way. That was your first, before you even got to energizing culture and strengthening platform and taking the brands better.
Yeah, well, look, the quarter shows the results of that. We exceeded expectations, both top line and bottom line. We gained market share, and all of this has been driven by the strength in our two largest brands. But the efforts that we're making in operational and financial rigor, that's what's showing up in the numbers. We expanded our gross margin by 530 basis points, operating margin by 570 points. Our inventory is down 16% versus last year, so we're starting 2024 with a great inventory composition and new energy. We closed the year on strong financial footing. We're just under $2 billion in cash on the balance sheet, and we're entering with renewed energy on the reinvigoration of our brands. But we're going to continue to operate with discipline against strategic priorities, operational and financial rigor, and that's what's going to enable us to really reinvigorate this incredible portfolio.
And I think that helps you get someone like Zach Posen. I mean, when I mentioned that Zach Posen's with Gap, the first thing people say to me is, oh, give me a break. And then they say, hold it. Just a second. I saw the ads. I see the linen. I like the look. So you're attracting people that maybe the old people couldn't attract.
Listen, this company is a magnet for talent. These are legendary brands. And Zach Posen is one of America's most celebrated designers. Zach's creative expertise, his cultural clarity, it's consistently evolved American fashion. And as he gets more immersed in the business, his influence will be considered really carefully, and the continuity of our brand reinvigoration will be a lot about creativity, design, and cultural relevance. We are thrilled with Zach, and there's lots of incredible talent at this company just being unlocked, and incredibly excited about the future.
Now, when you say you're taking share, say for Gap, who is it coming from? You don't have to necessarily pick out a company, but I'm trying to figure out, because in the old days, I remember one of your CEOs said, hey, we've got great data, so we're going to take share from XYZ. It never happened because the data wasn't fun. It's great to have, but it wasn't fun. You're winning from some people who, are they dowdy places that have lost their way? Because it's really remarkable, the share take here.
Look, I think Gap is a great story to spend a little time on. I mean, we've been reigniting this brand and drawing on what the brand was so special in the first place, really taking on-trend products and amplifying it in new ways that only Gap can. We're using music, we're using fashion as entertainment, and we're taking basic product, linen, denim, wovens, pants, and we're amplifying the narrative around these categories and driving share growth. Ultimately, kids and baby, it's an incredible category for us, underrated in the context of its recognition. And we have incredible strength. Old Navy is the #1 kids and baby brand in the US. Gap Inc. owns nearly 9% of the market. We've got incredible proven capabilities that resonate in this category and others. And it's our opportunity to continue to accelerate, becoming an even more important player in this segment, denim, active. We've got enormous opportunity with our capabilities.
Now, I know those are so huge that you can't even bother, I guess, to focus right now. I know you've got an eye on Banana Republic. I was at your Silicon Valley store outside of Bethlehem, and it was just it was just gorgeous. Everything was gorgeous. The prices were good. The people who worked there were fine. I mean, I did a major shop there, and yet at the same time, I know that you're not even really starting it yet. You could make that into one hell of a brand.
I love it. I'm glad you're a fan. It is a great brand. It's also, by the way, a sizable brand. This is nearly $2 billion with scale. It's got a competitive footprint that represents a particular opportunity within our portfolio, broad-based consumer in the premium space, but really valuing style, luxury fabrics at great prices. The look of the brand, as you see, it can take you from adventure, travel, office, evening out. The brand's aesthetic, as we've dialed this up, it's headed in the right direction. It's going to take some time to reestablish the brand's momentum. The team that we have is working really hard to strengthen the fundamentals. As I've said many times internally, retail is detail, and we need to drive more consistent results, strengthening the fundamentals, but it is a great brand waiting to be unlocked for the future.
Excellent. Now, I made a mistake recently, Richard, for one of my wife's 52 birthdays that she's had in the last year. I went into this site, Shein, and it is Temu. Now, of course, I think they're sending me everything just to flood the zone. But these a problem? I mean, we're back in a landfillville. I thought we got away from landfillville. Gap is a much higher brand than landfill. But these guys have got price points that are ridiculous.
Yeah, look, the apparel industry is a competitive one. It's cutthroat. We have iconic brands. You know, we have a strong store footprint with the #2 e-commerce platform apparel business in the country. We have incredible heritage. We have a tremendous opportunity by ourselves to reinvigorate these brands. We react to trends quickly, but we're not fast fashion.
Good.
You know, our commitment's to deliver style, quality, and value. And as a house of iconic brands, we take great pride in the trust that we build with customers who come to us for value and our values.
All right, well, let's leave. We have to leave it. I'm sorry, go ahead. Finish up. I'm sorry.
I was going to say, look, we have a legacy at Gap of creating positive impact in the communities that we operate in, not just what we do, Jim, but how we do it. We take great pride in our purpose and our promise to customers.
I'm a believer. What can I tell you? I'm a believer. I saw in that last comment, I said, you are real. All right, that's Richard Dickson, President and CEO of Gap. Richard, thank you for coming on what is definitely a major turn for a storied group of stores that we all want to win. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.